Welcome to Accelerated. I'm your host, Vitaly Golub. On this season of the podcast, we're hearing from some of the global leaders in everything electric and autonomous moving us quickly into the future. On this special bonus episode, I switched chairs with Brandon Bartnick, the host of the podcast that is coincidentally called The Future of Mobility, just like this season of Accelerated. Brandon has interviewed numerous leaders in mobility on his podcast, and we decided to post our conversation on both of our shows. In his day job, Brandon leads marketing at FEV, a global engineering partner for the development of sustainable mobility and energy solutions, supporting vehicle development from concept through production. This includes intelligent software development, propulsion system development, and full vehicle engineering. Brandon and I covered a lot of ground on the current state of electric, autonomous, shared, and connected mobility. Usually I do the interviewing, but today you'll hear some of my views. Here we go.
Today I'm joined by Vitaly Golub. Vitaly, thanks for coming on. I'm really looking forward to this conversation. So I think for the most part on Future Mobility Podcast, I'm talking to technical leaders in the mobility space of all type. And then venture capital space, I've talked to a few people, but I think you're the first from kind of this investment banking space, which I think is not one that I'm terribly familiar with. So I'm really looking forward to getting some of your perspectives.
Thanks, Brandon. And coincidentally, we named this season of our podcast Accelerated, The Future of Mobility. So it's very coincidental, but I think we're on the same topic this season, talking about this very exciting field of mobility, $5 trillion industry going through once in a many generation change as we see it, as we live it right now. So excited to speak with you.
Yeah, it's funny. So I've laughed, not the most original name that I came up for the podcast when I started it last year, but I mean it's very on topic though, because it's hard if you pigeonhole yourself to, I don't know, being electric or autonomous or whatever. It doesn't really capture this whole idea of where we're trying to improve the mobility ecosystem. We're trying to improve the way that people move from point A to point B in a safer, more sustainable way. And I think it really needs to be broad to do that. So would you mind, and I know we kind of dove in here, would you mind kind of introducing yourself, a bit about what you're working on? I think you have a really interesting background. So yeah, I don't know, a couple minutes, would you mind kind of sharing some of your background?
Yeah, absolutely. So I call myself the Benjamin Button of investment banking because usually people start their careers, right after business school in investment banking and spend, a decade learning how all of this works and getting into deal making. I did quite the opposite. My education is actually in design of all things, and I started working as a teenager, always the youngest guy around in dot-com days. Worked as a designer, and then started a series of my own companies where I was, the longest part of my career, 15, 16 years, I was founder and CEO of several companies. Sold the last one, joined Hewlett Packard, helped launch a corporate venture arm, HP Tech Ventures. Hewlett Packard is the original startup, the original Silicon Valley startup, started in the 30s. Lots of great history there. And then gradually made my way over to investment banking, started my own firm, and then merged with Drakestar, which is one of the leading firms in mid-market, where I specialize and lead the mobility category worldwide. We have about 100 bankers across 8 offices in US and Europe, and a couple of partner offices in other parts of the world. So pretty exciting space to be in. I got into mobility because I love it, and always been kind of a car, motorcycle, airplane guy. And it's interesting. We're doing a lot of work in electric, autonomous, connected, and shared areas of mobility, and these are all kind of the same theme these days.
And taking a step back to the investment banking. So I'm an engineer by training. I think a lot of the people who listen to the podcast are not, like I said, not as familiar. I mean, venture capital I think is easy enough to understand, right? You have people who come and invest and fund startups who are trying to develop these technologies that are making a difference. What exactly is the role of investment banker in this ecosystem?
Yeah, so I mean, I spent a lot of my time actually in early stage startups before this, where really what it's all about, it's about a team and an idea, right? At these very early stages. And when angel investors come in, or early stage VCs, they're really putting their money and their trust 80% into the team. They're seeing something that could work. They've been convinced and they like this team. When you get to later stages, when the business is running and you have millions in revenue, much more mature organization, capital raises become much more formal, or if the company wants to go and find themselves a buyer, they need to hire advisors. So investment bankers, mid-market, like where we work, We are service providers to companies. We're their advisors. They essentially retain us to help them raise, a substantial capital raise that may be much more complex than kind of early stages. Sell the companies. Sometimes large companies would hire us to actually help them buy startups. So that's kind of where we operate. I still do some angel investing myself. Of course, I'm very passionate about the space and know all the VCs in the community, but that's kind of where investment banking plays. Of course, investment bankers will also take companies into the public market and actually handle their IPOs. That's probably what most people are pretty aware of. These days, especially with mobility, we're actually advisors for companies that are looking to be acquired or merge with a SPAC and go public that way. And that's been obviously very relevant for the mobility category for the last year or so.
Yeah, and what are the key characteristics, or what are the things that make someone in your team, whatever, make you successful in this role that you're playing, trying to evaluate and put together deals and serve one side or the other?
Yeah, I mean, what you want with your investment bankers, your advisors, you want that experience. In my case, again, I'm a little bit different than a typical investment banker because there it's usually, very heavy emphasis on the financial aspect of it. Whereas most of my career I spent as an operator. So I approach it strategically. I certainly have all the financial components, but my approach is a little bit different, where kind of understanding the company strategically, advising the company, and speaking to board members as peers, because I've ran companies for so long that I know the ins and outs and I've seen a lot of these situations. So as a firm, Drakestar, what we pride ourselves on is being really sector specific. So we have sector specific expert teams that have the Rolodex, are constantly talking to investors and buyers in their category. They know all of the numbers, they know all of the trends, they can speak to the technology on a very deep level. So that's how we approach it. We're not generalists, we all kind of specialize in specific technology categories.
Really interesting. And so and I haven't played directly in the startup space for sure, so I'm speaking as kind of an outsider for sure. But thinking of my understanding is the kind of early stage seed, you're making decisions based on kind of the potential and the idea, and also the founding team, whether you think that this team and this idea can come to fruition, there's a real market for it, and they can kind of fight through the challenges and come out on the other side, and there's a fighting chance for them to grow. I have to imagine the criteria that you're evaluating for success later stage, when you have these more bigger players, more complex deals, more capital moving around, are different. So what are some of the key factors that you're evaluating?
Yeah, I mean, as a general rule of thumb, as the companies get more mature and drive revenue, etc., they certainly have. There's a lot more confidence that it will work out, right? At the very early stages, when it's a team, an idea, and their dog, it's a 98% chance that it's not going to go anywhere. But as you make progress, as you get traction, as you get customers, as you get into multiple millions of dollars worth of revenue, at that point you really start to dial it in and understand your business and your unit economics. So on the one hand, you're kind of de-risking it, but on the other hand, you need to put progressively bigger amounts of capital to keep growing. And the growth is not, 1,000% anymore, but it's going to be a little bit more incremental than that. So less risk, bigger amounts of capital, but kind of smaller percentage returns. That's what's expected, and that's kind of the venture model, right? As you de-risk, you put progressively bigger bets on the table. Of course, there's companies that fail at a later stage, or there's companies that go public and then go bankrupt. And it's worth saying with SPACs, a lot of the companies that are going public via SPACs are a lot younger than the companies that we've been used to since SOX compliance came in after Enron era, almost 20 years ago. This whole generation of investors kind of considers all public companies stable and kind of the same, but these are younger companies that, some of them will not get there. Some of them will fail because they are still, in some cases, they were pre-revenue. They just need to raise a lot of money to build a factory to start delivering products in 2, 3 years down the road.
Yeah, I'd be curious to get your thought on this SPAC phenomenon, maybe even the ecosystem overall. So I think of, I don't know, really with the pandemic started, it seems like kind of this Robin Hood phase, and it's not just Robin Hood, but it's kind of there's more retail investing going on, and then also and at the same time there's more of these companies, like you said, earlier stage being available for public investment, and there's a, to some extent, I think, a craze or frenzy around certain of these terms. I mean, if someone has electric or autonomous or something like that, or machine learning, AI, a few of these key things, especially people who aren't really in the industry, get pretty excited about kind of the next, or hydrogen right now, about these companies, going to the moon or whatever you want to say. How do you think about this? Trying to navigate this situation.
I'm assuming you're certainly familiar with the Gartner hype cycle. Your audience might be or might not be, but there's always a lot of hype when new technologies kind of cross the chasm and get known. There's a lot of excitement, a lot of hype, a lot of fear of missing out, where you have a lot of people, jump on it. But almost always there's a trough of disillusionment when it doesn't work out. When people realize that it's going to take a lot longer for this to become something tangible and for it to be a business. So certainly there are a lot of hypey, keywordy type of things that are out there that have been out there. But you will find that investors that are managing large pools of capital, they're pretty sophisticated in the way they approach this, and they're not just looking at the hype. Where retail investors might be driven by that, but the institutional investors that are controlling large capital and they're investing in the IPOs, they're certainly not that susceptible to the hype. They are looking at the economics of the business. They're at the same time trying to measure the excitement in the public markets because the retail investors are going to be the ones, essentially buying that stock in the public market. So there is that piece where you have to create kind of a marketing story and get interest and get a lot of news coverage and be consistent with it and kind of keep the stock price up. But at a certain point, we're looking at fundamentals, we're looking at, revenue, we're looking at revenue multiples compared to the peers of the company. All these things are the biggest factor there where you want to be able to really handicap it and have some downside protection. It's been interesting to watch because there's the peak of the SPAC hype was end of Q1, beginning of Q2 this year, and then summer was really really quiet. And now we're seeing the market really kind of normalize to more sustainable pace of number of deals. Because these SPACs need to find billion-dollar companies, billion-dollar plus value companies that they're acquiring to bring to the public market. There's not an infinite amount of these companies, and it takes a while for a company to get to that size and that valuation. So it's really interesting. And if it's retail investors, if you're investing your own money, I'm not giving you investment advice. I can't do that as an investment banker, not knowing you. But my only advice is do your research and understand the fundamentals of the company. There's one thing where you get momentum and you have the Reddit effect and things out there that drive stock price. But if you're not day trading and kind of doing that whole bit, if you're looking to get into great companies and hold them for a long time, you really need to understand the market that they're playing in, their competitors, the valuations, the fundamentals of that business to understand and kind of make a judgment if they're gonna have a future or not.
Yeah, and this gets outside of my area of expertise for sure, but something that human psychology is fascinating to me, and I think the markets and especially the retail market or investors in the market, it's really interesting to see, and it's also, I don't know, it's almost set up so that not intentionally, but the way the market works, you're going to end up with more confidence than you deserve because you make a foolish bet and then hype comes on the back end and you happen to time it right, and then you're like, oh, I'm smarter than everyone who's spending their entire life and their job trying to make these types of trying to price the market and figure out where there's arbitrage to be taken advantage of. And
I mean, it's really easy to feel like a genius if your entire investment experience is the market going up and to the right. But if you zoom out, the market is always cyclical. You can never predict the cycles, and ultimately, what will prevent you from losing it all when the market does turn, and it will turn at some point, it has to, is having diversification. That's told to everybody, is to make sure that you don't have all your eggs in one or two baskets, and really looking at fundamentals, looking at companies that will survive. I mean, one thing that is my approach with my personal investing is looking at companies that have uncontrolled monopolies. And I won't name any names. I don't want to recommend any specific companies. But that's always a factor. It's like, okay, if the market turns, if the economy turns, who will absorb? The strength is going to be going to the leaders, and there's going to be consolidation always to the leaders. So that's one area that I personally like to hunt. I'm looking at companies that really have a monopoly in a particular category or industry.
yeah, let's spend some time talking about kind of your specific focus here of the mobility. And again, not investment advice, whatever we're talking about here, but so talking about the mobility sector. So what's a trend that you are optimistic about, that you think that the fundamentals are in line? There's an industry that's growing and will continue to grow.
I just had Mate Remats on my on one of my episodes on the podcast, and he's a friend, and I've met him back in 2012 when there was eight crazy kids that started this company in Croatia in a garage to build an electric hypercar. And around 2015, I got involved directly with them to help them raise, their first real big round. And we went through quite a big struggle because EVs at that point were not really inevitable. It was still you still had to convince investors that EVs are something interesting and will change the market. So, something that we've noticed, and Mate has certainly, is that EVs are now, foregone conclusion, right? That's a no-brainer. Everybody understands, all the big OEMs, all the investors, everybody understands that we're going EV. Um, so that's a no-brainer area. Autonomy, I've mentioned our reports that we publish in things that I put out there for the past few years. Autonomy is much further away than some people or some companies will want you to believe, because they have, a horse in the race. And again, I won't mention any names, but autonomy, we're still an order of magnitude or a scientific breakthrough away from real autonomy, real level 4, level 5, no steering wheel, door to door navigation under any conditions type of autonomy. We will see autonomy in specialized areas. We already do see that in mining, in off-road, kind of more commercial applications, where you have a controlled environment and you can kind of control most of the factors. You will see it more in public transportation, and then you'll see specialized companies out there that are doing kind of the taxi bit. But again, it's limited to a very specific use case at each point. So autonomy, I think, is still, probably realistically, probably 4 or 5 years away from anything that goes beyond kind of level 2.9, which is where we are now on the roads, which is really, it's really assistive technology, right? It's ADAS. It's not autonomous, no matter what whoever calls it. It's not real autonomy because you cannot, read a book or take a nap while it's driving you around. Um, there are a lot of other elements, though, they connected and shared, that are related, right? So as we get closer to autonomy, car ownership will change, insurance will change. There'll be so many changes in all these kind of second order effects. We're going to have smart cities, the concept of smart cities, connected things to transportation. That's a major category, right? Transportation really is the biggest industry in the world. If you look at passenger, commercial, mass transit, freight, etc., all these things are changing. All of these things are kind of, the physical and digital worlds are merging, where we have all this control. We have a client that's digitizing, cross border trade, right? They're completely digitizing the whole path with APIs integrating into everything. So there's a lot of really exciting things happening in transportation as a whole. It's not just about, sexy electric vehicles on the road or autonomy, whether it's real autonomy or not. There are a lot of really interesting things happening around it, and it's never been like this. It's really an exciting market to be in. And the last time something like this happened was probably at the introduction of commercial flight, right, in the 30s. So it's a pretty exciting time to be here. I'm really excited to share something a long time in the making with you. My first online course. Over the years, I've trained thousands of founders through my book, Accelerated Startup, and my infamous Pitching Like a Boss workshops and keynotes. Like I've done for thousands of founders, I will teach you how to pitch like a boss. And for the first time ever, I will be doing it in a cohort-based online course. This is the world's most comprehensive and intensive course for entrepreneurs and future founders on pitching. It will help you craft the perfect pitch for investors and customers. It will also help you master public speaking. Get funded, communicate your vision to grow your team, and dramatically improve sales of any product. Check out golomb.net/pitching, that's GOLOMB.net/pitching for more information. See you there.
Yeah, in a few areas I'm going to want to dig a little deeper into. So one, you mentioned kind of the state or your thought on where autonomous vehicles stand. I hadn't heard level 2.9, but I think that's that's a good way to put it, because yeah, the definition of level 3 driving is that someone is actually, the car drives itself, which does not exist with the current highway pilots that we have. Maybe for some taxi type situations on closed areas, but So actually, I just had the pleasure and kind of a sobering discussion with Sterling Anderson, who's the chief product officer at Aurora. So he launched the autopilot, and so the podcast that'll come out in late October and the future mobility. He was chief product officer at Aurora since 2017. He launched autopilot for Tesla before that, and even now, the way he talks about autonomous vehicles is not that they're here. It's what you're saying. We're years away from them getting their first, and I think they have a reasonable claim that they're, if not exactly as far, but pretty competitive with the people in the market. So I think certainly there's a lot of hype about autonomous vehicles, but it's worthwhile to think about where this actually is and the people who are working on the technology, what they say about it, I guess.
Yeah, I'm in touch regularly with a number of folks that are very well known in autonomy, and they were leaders. Some of the first people to get into this, 15 years ago when all of this really got started. And unanimously, everybody understands and knows that we're still pretty far away. It's not, and to kind of dig into it a little bit, it's not really about the sensors, right? Um, there's this whole debate between camera only or camera and lidar, sensor array, sensor fusion, all these things. Of course, you want more data. That's always going to help. But the argument is that humans only have two cameras, and these cameras are not that great. But what we also have is 10 million years of evolution between those two cameras that help us make a decision. And really, the problem with autonomy right now is not really sensing the physical world around you in real time. That's pretty much solved. If you want an expensive sensor array on the vehicle, that's pretty much done. The question is, how do we predict what that car in front of us is going to do next? And that's really something that, no matter how many miles with current technology that you do, it's for some reason it's very difficult to teach a computer how to do that. Whereas humans have this intuition, understanding, okay, that car is about to pull out or what have you, and get in front of me. So that human factor is what we're trying to solve. It's really the sensing, all of that is done. And the computers are obviously much faster and much more predictable kind of computational machines than our meat brains. But that little piece of predicting what's going to happen next, that's really the problem that's being attempted to be solved right now.
Yeah, and two examples I like to give. So these are commonplace critical examples while you're driving, but one is pedestrian walking in front of you. So there's the amount of nonverbal communication that goes on, whether it's just reading or if it's a two-way communication where you're making eye contact and somehow indicating who's moving when, and you're reading how their momentum's going, all that type of stuff. Uh, Very challenging for an autonomous vehicle to be programmed in or for it to learn. And then similarly, I can't tell you how many times you're driving in a multi-lane highway and like you just know the car that sped up to you is going to cut over in front of you, and you can predict when it's going to change lanes. And I've thought about it a few times while I'm driving. Yeah, there's some stuff that you could put together, like speed and distance between the car in front of you and how much or distance there is to the car in front of the vehicle that you think is going to cut you off. But I can't imagine how you could reasonably kind of program that into an algorithm that's predictable to the level that our intuition is able to piece all this data together and make these predictions.
Yeah, I think you hit it right on the head. It's the body language. It's that nonverbal communication with a pedestrian, but it's also kind of transforms into this nonverbal communication of you watching a car do certain things on the road, and trying to predict what the driver is going to do next. So it kind of transfers. It's really interesting. And it's kind of in the realm of it's the opposite of the software developers type of personality. Is the skill set is really in the liberal arts and the psychology of understanding human behavior. That's really kind of the merge, and maybe that's the missing piece. Maybe that's something that we need more of in this science.
Yeah, and then let's talk a bit about electrification. So I think a couple of places I'd like to dig deep here. So the one you mentioned, electrification's inevitable, as you said, which maybe I want to talk about that statement a little bit. But assuming it is, I don't think it's inevitable that everyone who enters the space of electrification is going to succeed. So if you look at the amount of companies right now that are developing, whether it's electric pickup trucks or last mile vehicles or even OEMs springing up, it seems like there's some sort of consolidation that's going to need to take place over the next few years to get to some happy kind of medium after all of this is said and done. How are you kind of thinking about this ecosystem and trying to figure out, assuming that you agree that there's some kind of consolidation that's going to come. But how do you think about who might be the winners in this space?
Well, I mean, we don't have to look far, right? We always look at history to see what the future is going to look like. At the beginning of the 20th century, there were over 200 American-based auto manufacturers when cars first came out, right? The horseless carriages. There are over 200. And then we ended, with what, three in the century? So there will certainly be consolidation. And there are some companies, again, I won't mention names, but that are obviously struggling. The news is out there, and they will be kind of chopped up for parts, and whatever intellectual property that they had or assets, whatever, will merge in. There are other companies that are doing really, really a great job. New companies that are building the brand, building the following. They're doing all those pieces, right? It's not enough just to build a car. You really need to build a brand, and people have this emotional connection with their cars. So that piece is really, really important part. You can look at the struggle that Korean brands, for example, had, and how long it took them to get to kind of break through into the U.S. market. They were underpricing their vehicles, compared to the German brands that were established in luxury sector, for example, by 20-30% just to get the sell through, and they were never able to catch up. Building that brand, building the emotional connection, making that, building that desire in your customer to be obsessed with your car. The BMW people, the Porsche people, those people they love the brand. The Ferrari people, right? That's probably the best example. They are completely in love with the brand and the lifestyle and what it represents for them. So that social emotional component is very important, and a lot of the companies just don't have the bandwidth. They're so busy building the tech and struggling to raise money and building a factory and getting to production and all those things that they are not able to invest as much as needed into the brand. And that's a good sign. That's a big red flag that they're going to be susceptible to getting taken out, because it's a business that is very low margin, where you're counting pennies and nickels on a build, where you're trying to shave costs, and you're in a very low margin business. So if you don't have the brand, you're gonna have to try to you're gonna have to be the cheap company, right, where people will buy it because it's a cheaper alternative with some of the same features, and you're just gonna hemorrhage money. So it's inevitable that a lot of these new companies are not going to survive.
And do you think there's room to carve out a niche, or is this a short term? So I won't name this, but someone who's appeared on the podcast, so very clearly, I mean, even in the name, going after last mile electric solutions, and they it makes sense intuitively, right? So they don't necessarily need to be the high scale. They don't need to market to private use people who are buying private use. It's clearly a B2B market. It's ROI, total cost of ownership driven decisions. It seems like there's a market, at least in the short term, in my own mind, but I have a hard time envisioning kind of how this plays out long term without one of the big players coming in and playing in either making an acquisition or a direct competition or something like that. Is that something that how are you thinking about that?
Yeah, I mean, if we're talking about commercial vehicles, certainly the calculus is different. The buyers will buy that vehicle because they're looking for some kind of cost or feature advantage, and the proof is in the pudding, right? So if I'm looking at that company as a potential investor or buyer, I want to see the contracts. I want to see what kind of traction they have, and kind of those proof points. So it definitely changed the calculus. I mean, the other factor is that as we get closer to autonomy, people won't need as many cars, right? Our cars, everybody knows they're just standing around for 95% of the time. When you're living in a city, I mean, you look at San Francisco, New York, most people don't own cars because it's very expensive. You can just, it's, oh, there's Siri talking, but it's very expensive to own a car in a city, with the parking, with insurance, with everything else. And you're pretty close to most things. So it's actually, half the price to just Uber around all the time, and you have the convenience. When we're looking at autonomous vehicles, we're going to see more of that model, where a vehicle will be available to you and it'll be much cheaper. Let's say it'll be, I don't know, 30 to 50% of the current Uber cost, because you don't have the driver cost. Um, it will be fewer vehicles sold. So I think we've probably already passed peak passenger vehicle sales at some point. So not only do we have a bunch of new competitors on the scene, we have the OEMs, trying to cycle out the big OEMs, established guys, cycling out their internal combustion inventory as they bring new electric vehicles to market. I mean, one other thing that Stefan Kraus pointed out, who's former CEO of Canoo, former CFO of BMW, he's very bullish on EVs because there's a financial component too. Right? For example, BMW, whatever they lease out now, which is 80% of the vehicles that they sell are on a lease, they're going to come back in 3 years. And in 3 years, the value of those internal combustion vehicles is going to be much lower than the previous cycle, right? Because at that point, we're going to be even more and more people are looking at EVs, and the market for internal combustion is going to keep shrinking. But as we're talking about autonomy, that market will shrink substantially, and we're going to be looking at cars being something for fun, right? So there'll be a hypercar market, and it'll probably grow, sports car market, but general vehicles, you'll probably have fewer of those selling.
How are you thinking about these companies that are kind of taking more of a systems approach? So like mobility as a service, kind of as a broad topic, where yeah, just somewhat it's the shared automated route. But I guess to frame the question, so from a sustainability perspective, which is I guess I try to take that approach confined to the engineering. What's the most sustainable way to move around? I think of like the grocery store a quarter mile for me. The most sustainable way isn't for me to get in a conventional or a hybrid or a battery electric vehicle. It's for me to walk or take a bike or to potentially ride share or public transportation or like getting downtown for me. Like private use vehicle, kind of regardless whether it's an electric vehicle or not, is probably not the most sustainable way for me to move around. So from that perspective, I'm hopeful that some of these public, I guess they're not necessarily public infrastructure, but some of these mobility as a service or improved ways of kind of approaching the system of how to move people around in a sustainable manner. I hope that they take off. It's also seems incredibly kind of complicated to change the way, because I mean we have an ingrained culture of I have two vehicles. I have me and my wife have a vehicle. We're used to moving around in a certain way. So how do you think about this overall trend and whether it's actually going to catch on and how it's going to catch on?
Well, we have to look at, first of all, other parts of the world besides US, right? US is somewhat special because with the invention of the vehicle and cheap gas, many years ago, and all the highways that were built in the 50s and 60s, this allowed for this kind of urban sprawl. And if you're in the suburbs like I am, 30 minutes south of San Francisco on a hill, I don't have public transportation here. So it's a question of, okay, do I take my motorcycle? Do I take my car whenever I need to go somewhere, whenever the kids need to go somewhere, etc. Um, so there's that. But when you're talking about living in the cities, you have a lot more options now. Micromobility kind of popped up in the last few years, electric scooters, electric bikes that at once make it somewhat easy, but also solve the problem of traffic and kind of instant availability and a cheap vehicle that doesn't need insurance and all these things. So I don't think we're going to change the sociology of people. If they live out somewhere far from the city, it's not practical for everybody to walk, spend half their day. We're kind of regressing kind of to a lower form of civilization at that point. So I don't think people are going to make that choice. But if you give them the choice of public transportation and they see the economics of it and they live in some kind of density in a city, you're gonna have a lot more options. Now, if you look at environmental impact, electric vehicles have a higher environmental impact at construction of the vehicle because you have all these metals that are being mined for the batteries. Maybe that'll change as we go into different battery chemistries in the future. That's also a few years away if we're looking at, ceramic batteries, solid state lithium ion, etc. Um, but for now, you have an environmental impact to build a car. But that environmental impact almost completely stops after the car is delivered because then you're charging from the grid. And increasingly, we're seeing that the grid is going to be more from sustainable sources, right? There's a proposal now to cover both coasts of the US with offshore wind production, which will be big enough to cover, for example, the needs of 10 million households. That's a great start. We have other clean forms. So in the next few decades, we're going to catch up and we're going to have a lot more sustainable sources of electricity. But and then the other factor too that people bring up with internal combustion vehicles, I mean, one thing that kind of puts everything dead in its tracks, even if we're getting electricity from coal, is that the electric engine is at least 90% efficient, right? It uses 90% of the energy for its operations, whereas internal combustion engine is something like 20-25%. So the kind of the conversation stops there. Just on that, you have a 4 times more efficient engine in a vehicle. So but ultimately, if we're talking about environmental impact, the answer is something about having fewer vehicles. That's unavoidable, right? Ultimately, and having different options and having better public transport. That's really the best way to solve this. When companies start to catch fire and blitzscale and look for capital to fuel that growth or look to find the right exit strategy, they often seek the counsel of investment bankers. At Drakestar Partners, we work with some of the leading companies in global tech on capital raises, M&A, corporate carve-outs, SPACs, and much more. And we're pretty good at it. Our team of over 100 technology sector experts across 9 offices in 6 countries is comprised of not only career bankers, but experienced executive venture investors and technologists. Drakestar Partners is the #1 ranked and fastest growing mid-market investment bank across the US and Europe. While I focus on mobility and energy transition sector, along with all things Silicon Valley, my partners from the Pacific to the Atlantic and around the world lead in software, media, communications, and everything in between. Learn more about us at drakestar.com.
Yeah, and I guess quick anecdote. So I mentioned I am two vehicle family. Actually, for the past year, I haven't been. We've tried the kind of one vehicle and then make it worked with ride share, ride hail, or whatever, and ultimately just at least in my area in Metro Detroit, my wife goes to work at 6:30 a.m. and literally cannot get an Uber or a Lyft to get her to. So like, yeah, just that one kind of seemingly small factor is enough that requires us to get a second vehicle. Which, and I'm sure there's plenty of other examples. So just to say, it's a complex thing, and we're gonna have to address the entire ecosystem for it to really take over at scale.
Yeah, I mean, I was going to ask, there's another element we can add to this is, for example, Hyperloop TT has been a long time client of mine as well that we've been advising. And they're the first company that was put together to commercialize the concept of Hyperloop. Now, with something like that, people don't realize that this is only a few years away at this point. It's been under development for the last 7, and the technology is pretty much there. But building that, is obviously a big infrastructure project. Now, the importance of that is that you have something that will be much faster city center to city center, right? When we're talking about kind of middle distances, than taking a regional flight. So, for example, right now, for me to go from San Francisco to LA, if I fly, it's a short flight, it's under an hour. But for me to get to the airport, let's say an hour early, then on the other side, you're looking at about 3 hours. But what you're talking about with something like a Hyperloop, you're talking about 30, 40 minutes, city center San Francisco to city center in LA, versus these outskirts of the airport, right? Realistically, a trip from San Francisco to LA from door to door is probably about 4 or 5 hours when you take into account the traffic on both sides and all these things. And you're talking bring that down to 30 minutes. So what that'll open up is the ability for people to really live, kind of really urban sprawl, really get out of the city centers and get spread out and have a lot more room, if they desire to be out there, but they can still participate and get into the city very quickly. So that's gonna be very interesting. Ultimately, Ubers, that's a great gap measure where you have these taxis. It's measured that it's actually increased traffic because you have a lot of cars just driving around, waiting for passengers at this point as well. So you have a lot more a lot more traffic in cities like San Francisco. It's been measured. But what I'm talking about more is actual real true public transport where you have electric trains, either surface or underground. Imagine New York without the subway or Paris without the subway. It's impossible.
Yeah, and I like to. So anyone who spent time in Europe and especially Amsterdam, I loved for the few days a week that I was there being able to take a bike around, and I could even go take a bike to a train station and jump on the train and go anywhere. But which it feels great. You get an exercise. It's clean, sustainable. It's a lot of people can move on these bike paths compared to on public roads, but it's all kind of a key enabler in this equation is what you're talking about here, and it's the point to point ability to move between cities without needing to get into a personal vehicle.
Yeah, I mean, the other argument is that there are going to be a lot more people working from home. I think in when we're talking about knowledge workers, that's a possibility. My wife and I we're both working from home, so now we're kidding with a real estate agent, a friend of ours, that now you're going to market homes with 3 bedrooms and 2 home offices. So there will be that effect in certain places, but I think as we get through into deep into 2022 and the world comes back more and more to normal, you're still going to want that connection. You're still going to most of that's still going to be back. A lot of the business international travel will never be the same, right? We're not going to need to get on a plane just to have a meeting. I think everybody's kind of okay with that now. But we'll get there. We'll get back to the same level of travel for one way or another, in probably in the next 5 to 8 years.
Yeah, and there's a bunch of interesting factors here, and all these kind of cross-related variables. But I mean, even the business travel something. And I just a couple days ago, I was reading an interesting article with someone kind of sharing an opinion that, yeah, maybe business travel levels get close to, if not the same as they were before, but it's for very different reasons. So what we're doing right now, in the past we would have to probably be in person, or like initial customer calls and stuff. I'd jump on a plane. I've gone to Texas. I've gone, around the country just to say, hey, I'm going to meet you for a half hour in person. It feels like that stuff's not going to happen because it doesn't need to. But making a whatever the size deal. I don't know. I guess you're making huge deals on. Are you doing this stuff virtually, or is there still an element for you on the back end where you need to still break bread with people and stuff like that?
It is important, oftentimes when we hold a management meeting, right, when we're deep into a process, if a company is getting acquired, the acquirer, if it's a private equity or strategic, they need to sit down and look each other in the eye. They need to have a meal together and start building that connection. But a lot of I'd say most of the work before that kind of leads up to that is being done virtually, and everybody's okay with it because everybody's so much more productive. Maybe as a telling sign, we now have the busiest year of M&A in over 40 years, right? In 2021, because everybody's so productive, because there's so much deal making, because we're able to, I can hop on and off 4 different deals in a day, 4 or 5 different deals, different calls, instead of being on a plane and pushing things out, weeks out into the future as we would have done in the past.
Yeah, and I mean, I've alluded to, but I'm in business development as my kind of day job outside the podcast, and it's even my local customers here. It used to be close to half a day for even if it's a half hour drive because you got to get there early, get checked into the system, walk through, and have these meetings. And now it's half hour in and out, and you're on to the next thing, which is certainly more effective when it's used in the right situations. So I guess quick left turn for you. Something that I like to ask all my guests. So you've had a really interesting career throughout this entire ecosystem, and I'm curious to see how you answer this. But what's a favorite book or books of yours? So something that you've read through the years, whether it's personal, professional, and any part doesn't need to be related to mobility business necessarily. But what's something or a few books that you've read that have really impacted you that you might recommend?
Well, you've hit my favorite subject. So I published a book about 4 years ago, almost 5 years ago now, called Accelerated Startup, and that was based on my experience as a early stage venture-backed entrepreneur for many years, and all of the experience that I accumulated, and kind of going around the world as a keynote speaker and meeting people with different accents but the same problems, and that's something that I put out there. It's called Accelerated Startup. Of course, I read a lot of books, and it's hard to actually recommend, when you're in the midst of it. I read about a book a week at this point, and so it depends on the topic, but yeah, I mean, it depends on the topic, but something that I recommend that's probably on target, that's a little bit, it's a tough book to get through. It's a very high level, but it's Nick Bostrom's Super Intelligence, and what he talks about there is really gets down to nitty gritty, and really opens up the concept of artificial intelligence, what it will mean to us, how it might take off. It could be a fast takeoff or a slow takeoff or a gradual takeoff, and then projecting that billions of years into the future when human civilization is long gone, what this artificial intelligence could do. There was also kind of a related book that was I coincidentally read about the same time or right after, which was Avi Loeb's. He's a professor at Harvard. He's talking about, I forget the name now, but he was talking about, a few years ago we had a strange thing fly through our solar system, and he pretends that that's probably remnants of artificial intelligence from many millions or billions of years ago, from a different civilization, that is kind of sending out a probe into the universe. So really interesting things like that. There are other things that I like reading that are a little bit more down to earth. Literally, there's a great book that I just finished called The Rosie Project, and it's just a great book written by an Australian author about a professor that is on the autism spectrum, and how he perceives the world and relationships. Really great little book. I have a son with autism, so for me that's really interesting as well. So I could probably recommend, dozens and dozens of great books, but I'll kind of pause there.
Maybe so a few questions. One, this maintaining the pace of reading. So I found him. So I part of the reason I asked every guest, I love reading. I get a ton out of it, and pretty consistent through the years. But I've also found that uh, I go through these stages where, like when I'm like for example, when I was first out of college and trying to get into the business world, I'm trying to understand business development and how, like, I was rapid pace kind of reading as much as I can and trying to apply these different principles for uh, picking up communication skills, understanding again how business works, how deals are made, all that type of stuff. And then I slacked off a little bit because I got into more of I feel like I'm kind of applying this stuff and it's revisiting the same, and kind of less opening the blinders to new information. But then I change roles, and I go through these cycles over time. Do you find something similar, or do you find that you really get a ton of benefit from kind of plowing through and just continually getting this input of really interesting thoughts and ideas?
Yeah, I mean, I used to read almost entirely nonfiction. I would say entirely nonfiction. And for me, it was like, it was kind of this productivity thing that I saw myself like, okay, I don't want to waste any time. I want to just read and kind of absorb this information and put it in my brain and use it, put it to practice. But at a certain point, that becomes it's difficult to have, you have kind of, it starts fading off and
You read the same stuff, just put different ways for a lot of
yeah,
the.
you're gonna kind of oversaturate your brain. So now these days, I actually learn probably most from biographies. Right? I read Barack Obama's first part of his biography, which goes through his first term, and the book is 700 something pages, but really, really interesting. Michelle Obama's biography, which is kind of an interesting counterpoint. I read about the same time, and to see kind of her perspective on the same events and things. And so I probably read maybe still 70-80% fiction, nonfiction, and then maybe 10-15% more of biographies, and then the rest is probably fiction. But the fiction I will kind of read for a specific purpose, and it's really, it's really meaty. It's really interesting, and the fiction books tend to give you a different perspective more than anything, more than just raw data and raw information. But when I do read, I like to read kind of in groups, like books in groups, as Michelle Obama, Barack Obama's book, get a couple of different perspectives. Reading, Dark Money, for example, which is a great book on kind of how the U.S. system really works in politics and kind of the dark money that's behind the scenes and lobbying a lot of these crazy concepts and where all that came from. And at the same time, I read The Bitcoin Standard, which is a very libertarian book and kind of, talking about, here's what we need to do, which is, being born in a communist country, libertarianism is pretty funny to me as well, because it's just unrealistic as communism, because it's not taking into account human nature, right? And how people actually behave. That's a whole different story, whole different podcast. But um, reading those books in pairs or in kind of blocks will give you a deeper perspective, a deeper understanding, and that's how I found kind of where I want to drill down on a particular area and kind of go deep. But my other trick is that, obviously you can imagine with our industry working 12 hours a day, usually 6-7 days a week, I don't have a lot of time. So a lot of these books I'll do in audiobook format. And when I'm in the gym or driving somewhere or something like that, I will have that hour or two a day where I can listen to instead of podcasts. A lot of times I'll read, do the audiobooks for kind of longer form information gathering.
Yeah, it's interesting, and as you were talking, I think maybe you helped connect some dots in my own head about my own pattern. So yeah, I mentioned, so I started really this. I hate the term self help, but I think that was, or self improvement or whatever, what business books, kind of really practical type stuff. But I've over the last couple of years kind of shifted to psychology, theology, like kind of the question of like how to live, and even that, going from kind of the super, the by analogy, I don't think this is perfect, but the comparing the nonfiction fiction, as you're saying, of like the Stoic or Aristotle, Plato type, kind of very clear, cut and dry, kind of here's what to do, and then comparing that with like reading like the Bible or something like that, which is similar but also veiled in story, which in some ways helps to add so much complexity and depth. Which, yeah, I guess you maybe just saying that inspired me to get more into the biographies because I've heard, you hear a lot of people who are in leadership positions or and such that really get into biographies, but somehow I haven't gone that route so far yet.
No, and it's great. There are a lot of business biographies. You have Michael Eisner's book. He was CEO of Disney, right? It's a great one. Kind of his career, his continuum, how a lot of these things happened. If you're talking about kind of civilization, my recommendation is always *Sapiens* first. Then Jared Diamond's *Guns, Germs, and Steel* to see how Europeans conquered a lot of lands and how all of that came together, and then *Homo Deus* after that. So kind of Harari as bookends, and Harari was inspired by Jared Diamond. *Guns, Germs, and Steel*, for those that don't know, is a really great book. Won the Pulitzer Prize, written in the early '90s by Jared Diamond, talking about how Europeans use guns, germs, and steel to conquer, other parts of the world.
Yeah, very very interesting. And maybe let's quickly talk. So you mentioned Accelerate Startup, your book. What in there pulling that together? What do you think could you distill down into? If someone's in the early stage startup or whatever, an entrepreneur, what's kind of actionable key lessons that you think you typically share with people?
Yeah, I mean, I would say so. The reason I wrote the book is to kind of prevent that first year or two of pain and suffering that all entrepreneurs go through as they're learning what it's all about. It could be somebody that's very young, somebody college age, right after college that has a technical background, or it could be somebody mid-career as a manager that's switching careers and they think they already know how the business world works, but the startup world is very, very different. So the book is really for somebody to kind of how do they generate an idea, how do they validate an idea, and then how do they get to product, and then how do they get to build a company. So it's really kind of soup to nuts. There are a lot of books. The reason I wanted to write that book is it is comprehensive. It is from beginning to end, right? Whether it's a good outcome or a bad outcome and how to get through that. And in most cases, to be fair, it's going to be a bad outcome for most startups. But there are lots of books out there on how to do product management, how to do customer discovery, how to raise capital, various qualities of those kind of books. But there's nothing that kind of connects the dots from start to finish, and that's really what the book's all about. And there are a lot of things you have to pay attention to, and you have to be a really strong generalist if you're going to start a company, if you're going to be a tech founder, and you really need to build the right team. You need to take the right type of money, and you need to very quickly validate your idea and not presume that whatever popped into your head is automatically going to be correct. So the best companies, if you read about them, they've iterated over years. You'll never going to stumble an idea and it's just going to work out. You're going to stumble an idea or a general area. You're going to start doing, experiments just like a scientist would to validate that idea. And then you're going to increment on it. And that's how you're going to build that product and technology and get out the other side to something that has mass appeal, to your audience. The key thing that I learned from Dave McClure, who's a friend and a mentor, former investor of mine, founder of 500 Startups, is the customer problem framework. Who is the customer and what problem are you solving for them? That's really what you should be starting with, not I invented this widget, let me see who I can sell it to. Right? That's really the approach.
Yeah, and that's got to be tough. I mean, thinking of like the electric vehicle space, it seems like a lot of kind of research projects of, hey, here's an improved whatever component that we need to go sell because they're going to make all these improvements. And yeah, it seems like maybe there's not a clear understanding of what the need is and what the customer looks like within whoever is going to buy it in the B2B space.
Yeah, I mean, you need to understand, if somebody's inventing something, it's a tricky thing, right? So now, when I was at HP has HP Labs, which is a group of PhDs whose KPI, whose measure of success is how many patentable technologies they create and invent. But it's up to completely different people in the company with a different mindset and different set of KPIs to commercialize that technology. So it's really important to have that connection where you're not just inventing things for the sake of inventing, but you're solving problems, right? And that's really the difference. And it kind of goes back to my background. There's a big difference between artists and designers. Artists, they are doing self-expression, right? They're getting out something that's inside them, and if the world appreciates it, then they're a successful artist. Designers solve others' problems, right? They get a task and say, okay, I have this problem. I need you to design a solution for me, right? Whatever the area of design we're talking about or the discipline, That's really what it's all about. And that's really important for everybody to think about when they're creating something new. Don't just create for the sake of creation, unless you're a true kind of basic science person and your job is to do invention. But if you're an engineer, you're like a designer. You're creating a solution for a problem.
Yeah, good way to put it. So, Vitaly, I really have enjoyed this conversation. I think it's been great getting your perspective on a lot of the stuff we've talked about here in the investing space, and then some of these different trends, all that type of stuff. With that being said, I guess any closing thoughts that you want to get across, any place else you want to send people, any key takeaways you're hoping anyone who is listening to this walk away with?
My takeaway is, if you're in a startup space and you're looking to create something, spend the time to really research your idea and make sure that wherever you're planning to invest your non-refundable lifetime is worthwhile. If you're looking to reach out to me, you can find me online, golem.net, or on LinkedIn, and I'd be happy to chat with you about things that you're working on. So thanks for having me, Bren, and great to have you on my podcast here as well. That was my conversation with Brandon Bartnick, host of Future of Mobility podcast. If you enjoyed this episode, don't forget to give us 5 stars on your favorite podcast platform and share with your friends. If you hated it, share it with your enemies. We have much more in store on this season of Accelerated. We'll see you on the next episode. And as always, you can find me at golem.net.